Hi, final accounts. The concept of final account can be defined as those financial statements which are prepared at the end of an accounting year to review the company's performance and financial positions. These are the examples: trading account, profit and loss account, and the balance sheet. Trading account is prepared on the basis of factory or production units' direct income and direct expenses, and the difference between direct income and direct expense is taken in the shape of gross profit or gross loss. If income is more than expenses, it will be gross profit. Profit and loss account. The same gross profit or gross loss is transferred to profit and loss account, and remaining indirect incomes and expenses are merged to achieve the net profit or net loss. Gross profit goes to credit side of profit and loss account, and gross loss is placed on the debit side of profit and loss account. The balance sheet. Net profit and net loss then after transferred to balance sheet on liability side. Net profit is added to capital and net loss decreases the capital. Balance sheet is a statement which shows the financial position of the company, where assets, liabilities, and capital are there. Revenues and expenses are placed in trading and profit and loss account. Balance sheet is divided into two parts, which are assets and liabilities. Liabilities are kept on the left side and assets are put on the right side column. There is one more account for manufacturing concern, which is called manufacturing account. In this video, we will come to know how manufacturing accounts and its income statement are prepared. The other accounts will be discussed in next videos. Manufacturing account is prepared for manufacturing concerns who produce goods. There is a method to calculate the cost of the product until it turns out to its finished shape. Manufacturing accounts and its features. Anything which is produced or made has three elements to produce a product, which are raw material. Raw material is required. Then the labor is engaged to produce, and expenses, certain expenses incurred to complete the production. Each of the elements will have two categories, which are direct or indirect. Anything which can be identified and traced and is main part of element will be known as direct, and those which are not identified easily will be called indirect costs. Indirect costs are not major. Let's have a look at direct and indirect cost of each element. Direct material. As said earlier, the material which can easily be traced and identified in production is direct material. For example, if a tailor makes a dress, its fabric will be a direct material. If a carpenter makes a wooden furniture, the wood will be a direct raw material. Indirect material. Again, the material which is difficult to be identified. As per above examples, the tailor cannot identify the quantity of thread used in dress. A carpenter cannot trace the number of nails and glue used in furniture making. Direct labor. The labor which is directly involved in production of a specific product will be called as direct labor. In case of furniture factory, the carpenter cost will come under direct labor. Indirect labor. The labor which is not directly involved in production but part of the factory performing other duties such as factory in charge or other staff who just overlook, or monitor, or even the cleaning staff who keep the production area clean will come under indirect labor. Direct expenses. Normally, majority of expenses are indirect because the expenses for a particular product are very few. Sometimes a product needs a specific tools or small machinery to be hired to complete that job. In that case, the rent of it will be direct expense, or a product for which royalty is paid can be called as direct expense. Indirect expense, such as factory electricity, factory rent, depreciation of factory fixed assets, transportation expenses are the example of direct expenses. Now let's go further to find out what is the prime cost. The prime cost is equal to direct material plus direct labor plus direct expenses. These three elements, direct cost total, will be called as prime cost. Now let's come to overheads. What are overheads? Overheads are equal to indirect material plus indirect labor plus indirect expenses. These three elements in direct costs will be called as overhead. The overhead can further be defined in two categories. Number one, manufacturing overheads. Manufacturing overheads are related to factory or production indirect cost, which has been defined a while ago, whereas non-manufacturing overhead, all those expenses which do not occur on factory or production floor, but these are supporting expenses like selling and distributing expenses, office expenses, all administrative expenses, including finance costs, etc. Raw material of a product in a production unit has also three shapes. The raw material could be in pure raw form. This is the main raw material required to produce a product and it's traceable. Then work in progress or work in process. It means unfinished products which have a few steps left to get them finished. When an accounting period gets closed, work in process costs are also considered as inventory in hand. Finished goods. These are finished goods ready to sell. Now let's see how to calculate cost of direct raw material consumed. First, we will take opening inventory of raw material. This is the closing raw material inventory of last period, which will be opening raw material balance in hand in current year. Then comes the purchasing during the period. Then we will add purchases of raw material during the period to have total available raw material in hand. If there are any returns, we will deduct the returns from the purchases and will take the net purchases for the period. If any carriage inward means while purchasing, if any carriage paid, it will be part of the purchase cost, so we will add it also. And then comes the closing inventory of raw material. We will deduct the closing inventory of raw material to reach a figure of consumed raw material. Now we put the figures in each head to calculate the cost of raw material consumed. We said the opening inventory of raw material was 15,000. The purchases during the period were 70,000. The purchase return were 5,000, so we have to deduct from the purchases. The company paid carriage of 7,000 and plus the closing inventory. The company had 21,000. The cost of raw material consumed will be 66,000. Manufacturing account. We will now prepare the manufacturing account. A point to be noted here that production costs are the total of direct and indirect raw material, labor, and expenses in factory premises. Direct raw material. First, we calculate the direct raw material consumed as discussed earlier. Here it is. We take the opening raw material inventory. We add then the purchases during the period. Purchase return will be deducted. Carriage inward will be added. And then the closing raw material inventory will also be credited. And then we have the cost of raw material consumed. Then the direct labor will be added and the direct expenses will be added. It will be cost now the prime cost as we saw earlier. So this is the prime cost. Direct material, direct labor plus direct expenses is the prime cost. We will add now the factory overhead or indirect cost. These are the salaries for factory managers. They are all indirect costs. You can see there the factory rent, utility expenses, can be electricity, anything, insurance expense is related to factory only. Depreciation of factory machinery, and the total of overheads are 30,750. So it will again be added in the prime cost to reach to the total production cost. Now the work in process of last year and current year will be adjusted. If opening work in process is more than closing work in process, means that the difference has been consumed and it will be added up in cost. If closing inventory of work in process is greater, means that the cost will be reduced by its difference. Here in our case, the opening inventory was 4,000 and the closing is 1,800. That means 2,200 has already been consumed, so it will be added, and finally we reach to the production cost, or we can call it manufacturing cost, which is 134,950. Let's now prepare the income statement. We already know the total production cost in income statement. We will have sales and cost of sales to find out gross profit, and then after non-manufacturing overheads are deducted from gross profit to reach the net profit of manufacturing concern. Let's prepare it now. This is the revenue, 655,000. We have to deduct now the cost of sale. Here we will take the opening inventory of finished goods. We will add the production cost, which we calculated earlier. Further, we will take if there is any purchase of finished goods, and again the minus if there is any returns of the finished goods. Then the closing inventory will be deducted, so we reach to the cost of sale figure, which is 323,450. The cost of sale will be deducted from the revenue, and we will get the gross profit, which is 331,550. Now we will add here non-manufacturing overheads. These are all admin and office expenses. We can see here the staff salaries, office rent, depreciation of office assets, transportation, sales and distribution. So the total non-manufacturing overheads will be deducted from the gross profit to reach the profit for the year, and this is the net 179,700. This was all about manufacturing account. My next videos will be about trading and profit loss account and the balance sheet. So stay tuned and thank you.